You may have heard Tesla's profit fell 71% this quarter. Shipments dropped 22% in China. Deliverables in Germany down 62%. And yet the whales and the smart money in Asia maybe haven't moved an inch, because while Western media is screaming that Tesla is finished, China still trusts Elon. And Wall Street might be actually mispricing one of the few US companies that still has leverage on both sides of the Pacific. So this quarter was obviously brutal on the surface. Operating margins got cut from 5.5% to 2.1%. Their net income fell 71%. Tesla's global vehicle deliveries fell 13%, and their US market share dropped from 56% to 44% in their best-selling region, California. Add to that a consumer boycott due to Musk's political identity, protests and even fires at Tesla's charging stations, a huge hit to EPS, 27 cents to 41 cents expected. So yeah, if you're just seeing the headlines, the stock looks like it's actually just falling apart. But let me have you see what most traders are missing and how that mistake could maybe cost you 10x. See, this is not a story of Tesla is failing like a loser. It's Tesla is disrupting. So let's look under the hood. Number one, their production pause was intentional. Tesla temporarily shut down their factories to retool for a refreshed Model Y, its best-selling product. Now that did hurt their Q1 deliveries, but it sets up a smoother ramp for Q2 and Q4. Genius move by Elon Musk. 2, strategic price cuts. Tesla offered more generous promotions this quarter. That lowered margins, but protects volume in a savage pricing war going on right now internationally. 3, their energy business is low-key surging. So while everyone fixates on cars, Tesla's energy storage and software subscription just had double-digit growth. This is their non-car cash engine, and it's reoccurring revenue. 4, AI and robo-taxis, a multi-trillion-dollar moat. Tesla's biggest investments this quarter, not more gigafactories, but Doju supercomputers, AI chips, and the launch of their robo-taxi fleet in Austin coming up this June. That's what Wall Street isn't pricing in yet. So while US media tries to cancel Elon, China hasn't turned on him once. In fact, Tesla is still the only foreign EV maker allowed to operate without a local partner, a company that localized 85% plus of its Chinese supply chain. They leveraged Chinese gigafactory as its global export hub. This isn't just smart geopolitics, it's a supply chain dominance. Musk didn't build a car company. He built a resilient energy and tech stack that happens to sell EVs. And China respects their scale, speed, and innovation, not tweets. That's why Tesla gets better treatment than Microsoft in China. That's why US investors who abandon a Tesla over political sentiment are handing the upside to Chinese funds and sovereign wealth managers who actually see the big picture. But here's where most people in the West blow it. They confuse this short haul sentiment with long haul positioning. They look at one bad quarter, social media backlash, temporary production dips, and they dump their shares or avoid the trade. But let me ask you something. Did Amazon look good in 2001? Did Microsoft look good in 1990 with Bill Gates when he was doing the antitrust stuff? Did Bitcoin look like a winner at 4,000? No. All massive trades start with dislocation, when perception and fundamentals split. Tesla isn't trading on fundamentals right now. It's trading on emotion, politics, and the last news headline. So this is literally like your entry window, because Tesla still leads in global EV delivery volume, has unmatched software margins, owns this infrastructure, is training an AI model 10 years ahead of GM and Ford, just survived its worst quarter and still pulled in $19.3 billion in revenue. BYD is a threat, but it's still China domestic. Ford, GM rely on third-party tech. Lucid, Rivian, they're burning cash. Tesla is the only company turning profits in EVs and reinvesting in the next 10-year play. So you could love him or hate him, Musk still moves markets, builds faster than governments, and gets into countries most US CEOs just can't. Okay? So in China, he's not viewed through a US political lens. He's seen as an industrialist, a tech revolutionary. And that's why Tesla still continues to have this strategic relationship that Ford, GM, and Microsoft can't buy even with $100 billion in cash. So if there's a global economic reshuffle, Tesla is one of the few US companies already integrated into Asia's next chapter. We're in a window right now where Tesla is misunderstood. Musk is getting underestimated and retail traders are looking the other way. But for those of us who understand macro, geopolitics, AI, and supply chain strategy, this isn't a red flag, it's a green light. The next wave of wealth will go to those who spot price dislocations before perception catches up. Tesla might be the most asymmetric tech opportunity in the market today. So if you want to learn how to spot these mispriced bets, not just on Tesla, but in the sectors most traders ignore, then join my community. We cover global trends, China, crypto, AI, energy, and macro. You'll get weekly research from our team. You'll get up-to-the-minute breakdowns and classes that are designed for traders who don't have 8 hours a day to study charts. Your first week is basically free. Use the code 30credit. And if you don't love it, email me and I'll just refund you. And I'll buy you a cup of coffee at Starbucks. Click the link in the profile. Let's all try to get in and front run the next 10x together.